Trading Psychology for Dummies Part 1 Introduction. Have you ever wondered why two traders can look at the exact same market, the same currency pair, even the same chart setup, and yet one makes big profits while the other blows up their account? You studied strategy A, so did they. You used indicator X, so did they. But the outcome? Completely different. And that difference? It's not about strategy. It's not even about knowledge. It's about psychology. Because when you place a trade, you're not just facing the market, you're also facing your fear, your greed, and that little voice inside screaming, "I have to be right." Those emotions, not the chart, are what cause most traders to lose. The book Trading Psychology for Dummies by Roland Ullrich holds up a mirror and reflects the raw, honest mindset of a trader. This isn't just theory. Roland speaks from over 20 years of real experience, from investment banks to coaching hundreds of private traders. This book doesn't teach you another fancy indicator. It teaches you how to understand yourself, build mental toughness, and approach the market like a calm decision maker, not someone driven by emotion. This isn't a book that promises you'll make 100 pips today. It's a book that helps you still be here 10 years from now. And in this video, I'm breaking it all down for you, turning the key lessons into practical ideas you can actually use. Not just to understand the market better, but to understand yourself better. If you're looking for a way to trade with less chaos, less emotion, and more clarity and discipline, then this video is for you. Let's dive in. Part 2. Trading is a game of the brain. So let me ask you this. What's your first reaction when you see a big red candle suddenly dropping down the chart? If your instinct is to panic and close the trade, congrats. Your brain is in full survival mode. And that same instinct that helped our ancestors run from danger, well, it's now working against you as a trader. Roland Ullrich makes this point clear in the book. The human brain was designed to survive, not to succeed in financial markets. In other words, most of your natural reactions in trading are just wrong. Price drops, your brain says, danger, get out. Price jumps, your brain yells, quick, get in before it's too late. These are not well thought out decisions. They're automatic reflexes, fast, emotional, and completely logic-free. The book breaks it down into two systems that control your decision-making. System 1 is emotional, reactive, and fast. Great for survival. Not so great for trading. System 2 is logical, slow, and deliberate. It takes effort, but it makes better decisions. When your heart's racing, your palms are sweaty, and you're rushing to lock in profits, that's System 1 taking over. But when you pause, review your plan, calculate risk to reward, and accept the risk calmly, that's System 2 doing its job. And here's the real message of this chapter. You don't need more indicators. You need to retrain your brain. You need to learn how to see a red candle and not panic. Hear breaking news and not FOMO. Take a loss or two and not revenge trade. You don't have to be better than the market. You just have to be better than yourself. The version of you from yesterday. That's what keeps you alive in the long run. Trading is a mental game, and the winners are not the ones who guess right the most. They're the ones who manage their emotions the best. Up next, I'll show you how to build an unshakable trader mindset based on 4 core mental pillars used by all consistent traders. Let's keep going. Part 3. Building a strong trader mindset. If you asked me, what's the strongest weapon a trader has? It's not chart patterns, it's not indicators, and it's definitely not AI. It's mindset. Because without mental strength, all your knowledge and experience can vanish in an instant, after one major drawdown or a string of losing trades. So what does a strong trader mindset actually look like? The book Trading Psychology for Dummies explains it in simple terms. A mentally strong trader isn't someone who doesn't feel anything. It's someone who doesn't let emotions drive their decisions. They still feel fear, but they don't act on it. They still feel greed, but they don't let that push them into a trade. Now let's look at the 4 core pillars of a strong trader mindset. First, self-awareness. You can't fix what you can't see. You need to understand yourself. When do your emotions take over? What situations trigger you to lose control? Why do you FOMO? The book recommends using a trading journal, not just to record trades, but to track your emotions before, during, and after every single one. Second, discipline. No strategy can save a trader who lacks discipline. Pro traders stick to the plan, even when their emotions tell them to do the opposite. They don't move their stop loss out of hope. They don't double their position just because they think they're on a winning streak. Discipline is something you train. It's not natural, and it starts with small things. Writing a plan before each trade, not increasing lot size when you're up, and knowing when to take a break. Third, patience. Not taking a trade is also a trade. Beginners often feel they have to do something all the time, but experienced traders wait. They wait for the right setup, the right time, and the right probability. They're hunters, not gamblers. Patience keeps you out of bad trades, and that's how you make money, by not losing it. Fourth, emotional control. Protect your mind, and you protect your account. The market will test your emotions every day. A surprise news release, a candle spiking into your stop loss, a losing streak that shakes your confidence. Calm traders aren't robots. They just know how to feel emotion, without acting on it. Breathe, drink water, walk away, write things down. Small actions matter more than you think. Mindset is the foundation. Without it, every strategy is just theory. Coming up next, I'll show you how to train your mind like a professional athlete, using a simple but powerful technique from the book called Mental Self-Coaching. Let's keep going. Part 4. Mental Self-Coaching. Nobody is born with a bulletproof mindset. Even the best traders have felt FOMO. They've revenge traded. They've panic closed a position they should have held. The difference is, they know how to train their minds every single day. And that's why this next part of Trading Psychology for Dummies is so powerful. It introduces a game-changing concept: mental self-coaching, becoming your own mental coach. Why coach yourself? Because in trading, you are everything. You're the strategist, you're the executor, and you're the one who takes the hit. There's no boss behind you saying, "Stop revenge trading." It's just you and your brain in a room staring at a candle crashing down. So either you train your mind or it controls you. The book gives a 4-step process for mental self-coaching. Step 1. Awareness. You can't control what you don't notice. Train yourself to pause and ask, what am I feeling right now? Is this decision based on a plan or based on fear? Write that down in your trading journal, not just the price or entry, but what you felt when you entered, while it was running, and when you closed. Step 2. Reframing. A losing trade doesn't mean you're a bad trader. Cutting a loss is not failure. Skipping a trade today doesn't mean you missed the opportunity of a lifetime. You have to change your internal dialogue. Instead of saying, "Another loss, maybe I'm not cut out for this," say, "That was tuition. I still have capital. I still have a chance to get it right next time." Step 3. Focus. The past brings regret. The future brings fear. Only the present gives you control. Top traders don't dwell on the last candle. They don't try to predict the next one. They stay focused on what's happening right now. Here's one trick. Take 10 deep breaths before placing a trade. Or ask yourself, if I wasn't afraid of losing, what would I do right now? Step 4. Reinforcement. You can't train your mind in one day. It's like going to the gym. Your emotional muscles need constant training. Here's what the book suggests. Each morning, review 3 mental principles you want to follow that day. Each evening, review what you did right, what you did wrong, and why. And don't just grade your trades, grade your mindset. Great traders aren't always right, but they always manage themselves, even when they're wrong. Up next, we'll go through 10 of the most common psychological traps traders fall into, and how to avoid those same painful mistakes. Let's keep going. Part 5. Classic psychological traps to avoid. If you've ever been stuck in a losing streak, held onto a trade all week just to break even, or jumped into a candle that was flying up, thinking, "I can't miss this one," then you've already run into some of the most common psychological traps in trading. The book Trading Psychology for Dummies lays these out clearly, and honestly, once you hear them, you'll probably nod and say, "Yeah, I've done that more times than I care to admit." Here are 5 of the most dangerous traps and how to avoid them. First, overconfidence. You win a few trades and suddenly you think, "I get this now. I've figured out the market." So you increase your risk, skip your plan, and ignore your stop loss. One big loss later, all those wins, gone. How do you avoid it? Trade every session like you're just starting out. A winning trade is a result of probability, not proof that you're a genius. Second, revenge trading. You take a big loss and your emotions explode. You jump right back in with more risk, trying to make it back fast, but at that point, you're not trading anymore. You're fighting your ego. How do you avoid it? After a painful loss, stop, stand up, walk away. Only return when your emotions are cool. Third, confirmation bias. You decide to buy. Then you only look for reasons that support your decision. Good news? See, I told you. Bad news? It's just a temporary dip. You're not analyzing, you're just defending your emotion. How do you avoid it? Ask yourself, what would make this a bad trade? If you can't answer honestly, you're flying blind. Fourth, sunk cost fallacy. The trade is in red, but you don't want to close it. Why? Because you've already invested time, money, and mental energy. So you say, let's just wait a bit longer. And just like that, a small loss becomes a disaster. How do you avoid it? Always set your stop loss before entering. And ask yourself, if I didn't have this position right now, would I still open it? If the answer is no, get out. Fifth, FOMO, fear of missing out. The market is spiking. Everyone online is excited. You feel like you're missing out. So you jump in right at the top. And boom, the market reverses. How do you avoid it? Remember, opportunities are endless, but your account isn't. If the trade wasn't in your plan, don't take it. Pro traders don't avoid mistakes. They just see them faster and cut them quicker. In the next section, I'll show you how to build a trading system that fits you, your time, your personality, and your mindset. Let's keep going. Part 6. Building a trading system that matches your mindset. A lot of traders ask the same questions. What's the best system? Which indicator wins the most? Whose strategy should I copy? But here's the truth. Those are the wrong questions. The right question is, what system fits me best? Why? Because the market doesn't destroy your account. Your emotional reaction to the wrong system. That's what does the damage. If you're hot-headed, swing trading might not be for you. If you're impatient, scalping could be a nightmare. If you only have 30 minutes a day, full-time day trading will exhaust you. The book shares 5 core parts to building a trading system that fits your psychology. First, choose a trading style that matches your personality. Are you a risk taker or more cautious? Do you have lots of time or very little? Scalping is for fast thinkers with steady nerves. Day trading requires a few hours of focus. Swing trading suits calm people who don't mind waiting. Position trading is for those who think long-term and use fundamentals. Your system doesn't need to be fancy, it just needs to fit you. Second, trade the market you understand. Don't chase every asset just because others are making money. Forex, crypto, gold, stocks, each one behaves differently. Pro traders don't jump around. They pick one field, go deep, and that's where the results come from. Third, have clear entry and exit rules. No emotional decisions. Never enter a trade because you feel lucky or heard something online. Instead, have a clear setup. For example, breakout, rising volume, and retest. Use a fixed stop loss. Set logical take profit based on structure, risk-reward, or a trailing method. No rules means your emotions will take control, and that means your account is in danger. Fourth, manage risk. Discipline is how you stay alive. You can win 5 trades in a row, but one oversized loss can take you all the way back. The book says, risk only 1 to 2% of your account per trade. Always use a minimum risk-to-reward ratio of 1 to 2. Never go all in, no matter how confident you feel. Your goal is not to get rich quick, it's to stay long enough to grow steady and strong. Fifth, backtest your system and adapt it. No system wins in all market conditions. You need to test it on past data and tweak it as the market evolves. Pro traders pause when conditions change. They don't force trades when the system doesn't fit the environment. A good system isn't enough. It must match your mindset, your lifestyle, and your emotional profile. Up next, we'll talk about something painful but real. How to deal with losses without falling apart, and how to bounce back like a professional. Let's keep going. Part 7. The psychology of dealing with losses. Here's one truth about trading. It's easy to say, but tough to accept. Losses are guaranteed. It's not a matter of if you'll lose, it's a matter of when. Every trader goes through it, even the best in the world. So what determines whether you survive this game isn't how much you win, it's how you handle your losses. Now let's talk about what losses really affect. Yes, they hit your wallet, but more than that, they hit your confidence, your ego, your emotions. You start doubting your strategy, then you start doubting yourself, and then you take a reckless trade to make it back. And that's when things spiral. According to the book, here are 3 ways to recover your mindset after a loss. First, separate system losses from emotional mistakes. If you lose because of unexpected market behavior, that's normal. But if you lose because you broke your own rules, that's where the problem is. So log it in your journal. Did this trade follow your plan? Did it exceed your allowed risk? Was it based on fear or logic? Learn from it. Turn the loss into tuition for becoming a better trader. Second, accept losses as part of doing business. Business owners pay rent, salaries, and other costs. Traders pay with losing trades. That's not failure. It's the cost of staying in the game. Write down a mantra to stay grounded. Something like, I don't get paid to be right. I get paid to follow my plan. And third, don't trade when you're emotionally wounded. You wouldn't drive a car drunk. So why would you trade when your mind is spinning? After a losing streak, take a break, go outside, exercise, do something to reset your mindset. Come back only when you feel steady again. Losing is part of the game, but how you deal with it, that's what separates the ones who survive from the ones who quit. Next up, I'll show you practical ways to manage stress and emotions so you can stay clear and calm no matter how crazy the market gets. Take a deep breath, and let's keep going. Part 8. Managing emotions and stress in a high-pressure environment. From the outside, trading sounds simple. Sit at a screen, click a few buttons, make some money. But anyone who's actually done it knows, trading is intense. Every trade puts real money on the line. Every tick on the chart pulls at your emotions, and there's no boss keeping you in check. You're the decision maker, and you're also the one who has to live with the results. No deadlines, no coworkers, just you and your ability to manage yourself. And here's the thing, if you don't manage stress, it builds up, and then it blows up. You'll start revenge trading. You'll overtrade just to feel productive. You'll lose sleep staring at charts at 2 in the morning, and before you know it, you won't know the difference between logic and emotion. The book offers 6 simple but powerful techniques to help reduce stress. First, conscious breathing. When you're stressed, your breathing becomes shallow and fast, which only makes things worse. So take 60 seconds. Breathe in slowly. Exhale even slower. It's simple, but incredibly powerful. Second, take scheduled breaks. Sitting at the screen for hours doesn't make you a better trader. So set a timer to take breaks every 90 minutes. Stand up, stretch, splash water on your face. Don't wait until you're overwhelmed. Stay ahead of it. Third, keep an emotion journal. Don't just track your trades, track your feelings too. How did you feel before, during, and after each trade? After a week, you'll start seeing patterns. Fourth, stop comparing yourself to others. Social media is a trap. You'll see other traders post huge wins, and you'll feel like you're falling behind. But remember, no one posts their losing streaks. So compare yourself only to the trader you were yesterday. This is a long game, and you're running your own race. Fifth, turn off the screen and live your life. Sometimes the best thing you can do for your trading is to shut your laptop and take a walk. The market will still be there tomorrow, but your mind needs time to recharge. And sixth, set boundaries for your trading hours. Don't let trading eat into your meals, your sleep, or your time with family. Being a successful trader doesn't mean trading non-stop. It means building a balanced life that trading fits into. A sustainable trader knows when to engage with the market and when to step back to protect their mindset. Coming up next, we'll take on one of the sneakiest enemies in trading psychology, the ego, and how it quietly destroys trading accounts. Let's keep going. Part 9. Ego in Trading, a Lesson in Humility. There's a silent killer in trading. You won't find it on the charts. It doesn't show up in your platform or in any indicator, but it's destroyed more accounts than any technical mistake ever could. That killer is ego. Ego makes you refuse to admit when you're wrong, so you hold on to losing trades. Ego pushes you to prove something, so you take impulsive, reckless positions. Ego whispers, "Don't close it, it'll come back, just wait." Roland Ullrich says it clearly in the book. The ego doesn't care about making money. It just wants to be right. But here's the truth. The market doesn't pay you to be right. It pays you when you act right, even if that means doing the exact opposite of what your pride is telling you. So how do you shrink your ego? First, detach yourself from outcomes. A losing trade doesn't mean you're a failure. A winning trade doesn't mean you're a genius. Don't label yourself based on a single result. Second, learn to let go. At the right time. If a trade is clearly wrong, cut it. Even if you spent hours analyzing it, even if you really believed in it. Because the market doesn't care what you believe, it moves on its own terms. And third, remind yourself every single day, I don't need to be right, I need to manage risk. Ego is why you hold too long, risk too much, and lose more than you should. Humility is your best defense, the shield that protects your account. We're almost at the end of this journey. Let's wrap it up with some final takeaways from the book and a few simple actions you can take to level up as a trader. Let's finish strong. Part 10. Final thoughts and call to action. Trading isn't a game for the ultra-smart. It's not about being the best guesser or jumping on every headline. Trading is a journey of mental discipline, a job that requires more emotional maturity than almost any other profession. The book Trading Psychology for Dummies doesn't teach you how to call the top or the bottom. It doesn't promise overnight wealth. What it gives you is what really matters. It holds up a mirror to your trading mind. It gives you tools to train yourself every single day. And it delivers honest wake-up calls to help you survive and grow in this game long-term. If you've ever lost money because of fear or greed or stubbornness, if you've ever felt lost after a streak of red trades, if you want to be a trader who lasts, not just someone who wins a few trades and then disappears, then this is the book you need to read. Take action today. I've included a link to the original book on Amazon in the video description. Click it to grab your copy and help support this channel at the same time. You won't pay anything extra, but every purchase through that link helps us fund more content like this, so we can all keep learning, growing, and improving together. It's a win-win. And if you want to go even deeper, check out my other book reviews on titles like Trading in the Zone, The Disciplined Trader, or One Good Trade. Or if you'd like a full video on building a daily mental training routine, just leave a comment. I read them all. Learning is the investment, but taking action, that's the real beginning. Thanks for sticking with me until the end. Stay grounded and protect your capital.